Good afternoon, everyone. My name is Jason Allen Jankowski, Forex analyst and trader. This particular broadcast is training for my proprietary trading system, the Pro Traders Toolbox. Now, I noticed that we've got some regular listeners in here, and we've got some new handles. Not too many new people, but new listeners. So I want to remind you that it's an open forum. If you're a brand new listener, you can come to any of my programs anytime when I've got them. All the details are on my website. I'll have my complete contact details for you later if you don't have them. But also, I want to remind you it's an open forum. You can put a comment or a question in pretty much any time during the broadcast. All you have to do is put in the Q&A box. And we'll have time at the end of the broadcast for Q&A. A lot of people come because they're not real sure they understand what the toolbox is, and they just want to sit and listen. That's fine, too. But if you are an owner of the toolbox and you've got a copy of it, then you might find that some of the stuff we talk about here might be new or more challenging, and you've got some questions, so feel free. Let's go ahead and get right to work. First of all, I want to remind everybody that trading in cash foreign exchange is considered a risk investment. It's not considered appropriate for all traders or all investors at all points in time. So you want to consider carefully if it's right for you in light of your personal tolerance for risk and your personal finances. People can and do lose money. In rare cases, they might lose more than they invest. Everything that we talk about in here is considered opinion, so it's subject to change at any time. Let's go ahead and get right to work. For you new guys, I want to just give you a 2-minute sketch. For you guys that have been here a while, this maybe go grab a cup of coffee because you heard this before, but I want to remind everyone that, the reason that I put the Pro Traders Toolbox out there and offer it as a tool for you is because of my background. I learned to trade from the inside out. I started in 1986, and the reason I want to tell you a little bit about myself is because I think that's important so you understand the psychology and the thinking behind what the toolbox is, so you can understand why the signals are generating where they are and how best to try to use them. I started in 1986 as a customer. I actually opened an account with a broker and began trading. Of course I lost money, but that didn't matter. I knew this is what I wanted to do. So in 87, I became a licensed Series 3 commodities broker. And in the process, learned that the inside business of trading is probably the sleaziest thing you'll ever see. I write about that in The Art of the Trade, which is one of the books that I've been published under by Wiley & Sons. I have 3 titles published by Wiley. And the reason I tell you that is because I bought into this bull that you guys see every day, that you can learn and study your way to a trading fortune, that the more you learn about the markets, the more you're going to be able to win. And so I did everything there was to learn. And at that point, in 86, there wasn't really a whole lot. There were a handful of books and advisory services, and you could subscribe to a fax service that would every morning would fax you the day's recommendations for trading. But there wasn't like you have now, where you've got unlimited market access through the internet, automated trading, emails, free webinars like this. None of this happened, right? It was all, if I wanted something, I had to go get it. And that meant I had to go look up the author. And if I wanted to find out, more about MACD, or actually earlier than that, stochastics, if I wanted to find out more about stochastics, I had to go find George Lane and knock on his door at the Board of Trade. It was a lot harder to do then than it is now, in my opinion. But the proliferation in the industry has actually worked against you, and now the amount of information that you have, this voluminous amount of information, it does less for you now than it did back then. In fact, it's harder to make money. And the reason why I wrote the Pro Traders Toolbox is because after a lifetime of getting my head kicked in doing this, and I learned what really matters, how to really profit, and how to put the numbers on the board. When I learned how to do that, do it consistently, what I discovered was that the markets and the way to profit is done completely differently than what you're told during this process of, quote, education. And, of course, you wouldn't know that because no one has taught that. So the purpose of the toolbox is to shorten your learning curve and basically say, look, if you don't want to repeat the same mistakes everybody's made, spend a lifetime trying to figure this stuff out, fine. Own someone's point of view. That's what I have here. This is what it is. It's a point of view. It shows you places where you could be a buyer or a seller. And what we're going to do today is learn how best to use some of those places. It doesn't mean that you're going to make money. It's not the holy grail of trading, because trading doesn't have anything to do with the markets or the signals. Now, these signals are better than other signals. And if you know how to use them, you can get reliability levels that are 70 and 80%. Now, so far for this month, my win-loss ratio for January using the Toolbox has been above 70%. Now, I'm not saying that you're going to do that coming out of the box by owning a copy, but I am saying that those kind of potentials are there if you want to learn how to use it. And it takes a little bit of time. So let's get right to work on how it works. First of all, I'm going to give you some basics. I'm assuming that you're attending today because you just bought a copy of the Toolbox. If you don't have a copy or you want to know more, there's all kinds of stuff on the website on the Pro Traders Toolbox page. If you own a copy and you haven't installed it yet, or you got some questions about it or it's not working right, here's some things you need to do. Trade Navigator, you got to work with Genesis Financial Technology Support. Here's their contact information. If you got a copy of it for TradeStation, Multicharts, MT4, you're going to need to go back and talk to Code for Traders. Go to Progster at Code for Traders, Progster at codefortraders.com. If you want to own a copy of the Toolbox and you don't have it yet, if you got TradeStation, Multicharts, or MT4, you got to call Progster or email Progster. If you have a copy of Trade Navigator and you want a copy of the Toolbox, call me and I'll take care of you. You want to make sure that you use, there's a couple of basics here. You want to use the template for the currency pair that's created. When you buy the Toolbox, there's 5 templates. One for pound, euro, yen, CAD, and Swiss franc. You can use those templates on any market, but for the top 5 major pairs, there's a couple of minor nuances that are built into the background. So if you're going to trade dollar Canadian, make sure that you use the dollar Canadian template. That way your signals will be a little bit more accurate and you'll get a little bit more out of them. Also, if you're using Genesis, get the maximum data set you can get from there and install it for historical accuracy. You might want to talk to me too because I'll show you how to make sure and get better use of the signals on Genesis. TradeStation, they got a radar screen. The benefit of running the Toolbox on this platform is that if you're going to use this concept that I offer, which is multiple time frames, understanding multiple time frames, the radar feature on TradeStation and actually the one in the multi-charts is a very helpful tool because it will present more than one signal on more than one time frame. You know, it keeps it in one spot to look at, so you don't have to go through pages of screenshots. The back testing features on multi-charts and MT4, the page creation, it can be very easy to put together some custom pages. I like using that. That'll save you some time and speed when loading the Toolbox on multiple pairs. Regarding the signals themselves, I want to get right to work on helping you understand a little bit more about the signals. What you're looking for from the signals, the basic thing that you need to have from the signals is an understanding of the concept of confluence or conflict and congruence. Conflict and congruence between time frames. And I'm going to show you some basics on this right now. I'm going to show this to you running on Trade Navigator today. Now, in some of the broadcasts that we do in the coming weeks and months, I'm going to be showing it on MT4, on multi-charts, on TradeStation, so you guys can get a well-rounded view about how the Toolbox works and looks on other platforms. But if you already own those platforms, you already know that. So what we want to do today is just show you what the signals look like so you can get an idea about if this makes sense to you. Now on the website, my website, I posted some videos to help you with using unique features of the various platforms. In other words, there's an introduction to the Toolbox on MT4, TradeStation, multi-charts, etc. So you might want to look at that. What I'm going to do right now is I'm going to get the Toolbox up on Trade Navigator, and I got to switch over here. And let's make sure we're all on the same page. Can you guys see what I have up here? I have dollar Canada up. I don't know if you guys can see this. I want to make up on running on this. While we're doing that, Jeremy says he's not an owner yet. That's fine. Jim says, when will the iTunes stuff be sold as a complete package? According to my Toolbox guy, or the guy that runs my Apple iPhone app, it's should be ready now. That doesn't mean it's going to be available on the Apple iTunes website now, but it should be ready to go. So why don't you email me? I'll forward it to him. He can send you the links if it's available now, or just put you in the loop so you're notified when the time comes. Ninja 7, no. That would be something I don't know how to do that. Guess we got the screen up here. Comment here. George has got a good intro. He said, I found that using the of command in Trade Navigator can create a highlighted bar to show exponential, hook, or reversal indicators from higher time frames all on the hourly chart. No need to switch from chart to chart. I'd be interested in learning more about that. I'd be interested in learning how to program that and make sure others know how to do that. That would be a great tool, George, so we need to talk more about that. Plus, we were talking about trying to automate some of this stuff, and I lost touch with you on it because I've been so busy putting together this mirror trading program, so we need to get together on that too. So maybe in the next couple of days you could email me. We'll find time to talk, and maybe you can walk me through it. He says that's a work in progress too. No worries. But I'd love to know more about how you can create a highlight bar with the other time frames. I'd love to know more about that. So maybe, if nothing else, give me 5 minutes of your time sometime this week and show me how it's done. Okay. This is an hourly U.S. dollar, Canadian dollar chart. The signals that we see on the hourly here are from the toolbox. What you see as these moving averages are stuff that I put on that are not on the toolbox. In other words, if you load the toolbox, you're not going to see these moving averages. All you're going to see is these signals. This trend line here, which is actually support and resistance line, that comes from these programming features that you see over here on the right. You know, you can also, on anything, you can put it, like here's a fib thing. It's no different than any other platform except the signals when you use the template charting. Template. There it is. And then here we go. What we have, Pro Traders Toolbox, pound, dollar, yen, whatever. Okay. You can load the template on any market. Here it is on Dow Jones Industrial Average, the cash industrial average. This is a 60-minute chart using the dollar yen template. I also, put gold up here. This one I think uses the Swiss template, or I use yen. I use yen on the gold here as well. So there is definitely, you can use the template on other markets, but when we use that template period, you can use whatever you want on it that the analysis package allows for you to use, but the template, if you're using it, preloads the algorithms and you get these signals. The signals are really simple. There's trend signals and there's reversal signals. These H's and X's are types of reversals, exponential and hook reversals. Hook reversals are typically tested, so you want to be careful when using a hook reversal. You'll find that you'll see them a lot before you finally get the reversal. X reversals are a little bit more accurate, and they'll usually give you a lead pretty much every time. What happens to that lead and how you manage it kind of depends on the market, and depends on you. But X reversals are really reliable. This is actually the perfect setup, and this is why I bought it today. I was long trying to find down in here last week, didn't have a lead on it big enough, and had a small loss. So I wanted to take the next buy signal. Well, the next buy signal was over here today, because these, what you see as sell signals, this is an issue of conflict and congruence that we talked about before, and that maybe might be new to you, but the sell signals, these are late. Now, how do we know they're late? Well, we have used some common sense here. If we look on the daily chart, the sell signals that came on Monday and Tuesday this week were at the lows for the month. So why would you sell into the monthly lows, especially when those monthly lows were actually the same price level as last month's lows? There's a better probability that the market will rally off of a monthly low that is a double bottom with another monthly low than it will make a new fresh low. It's more likely for a rally of some kind. So if we go back to the 60-minute chart again, these reversal patterns seeing here on the 60-minute are saying it's probably a good time to buy, right? Over here, these trend signals are saying there might be a new uptrend kind of trying to develop here. It doesn't mean the market can't break lower, but most likely it means there is some positive developing for upside potential here. Notice that we made the high for the week on Monday, Tuesday, Thursday, or Wednesday, and Thursday. So high for the week on Monday, pull back to test the bottom of the range. One tick high on Tuesday, new high Wednesday, new high Thursday. Now we're right back in the buy zone at the opening range for the week, and the toolbox is saying opening range for the week, double bottom being tested on a monthly time frame, double bottom on possibly a weekly time frame, and we're getting buy signals coming in. Probably a good time to buy. Now if we go up the toolbox time frames, now we're starting to see conflict and congruence. When you got the buy signal on the 60-minute, the very same bars on the 120 are saying sell. That's conflict. Last week's buy signals on the 60-minute had a H reversal on the buy side on the 120. That's congruence. So when the same signal appears at roughly the same price area at roughly the same time, that's congruence. When you get opposite signals on the same bar, that's conflict. Conflict and congruence are real important. Conflict on a lower time frame when there's congruence on a higher time frame is a great trade. Here's what I mean by that. We have congruence on the 60-minute and the 120 from last week. Nothing this week on the buy side, but something from last week. If we go to the 180, we don't have any buy signals from last week to this week. If we go to the 240, it's all sell signals all week, right? So if you were wanting to be a seller, you've got great congruence on sell signals. However, those sell signals are coming on at a monthly low. Might be a little bit more risky. I would go with the buy side. Now at this point, there's not a lot of congruence on the buy side signals yet on the higher time frames. The only thing that we have to go with here is that we've got a 60-minute buy signal, a 120 buy signal from last week that's really starting to work a little bit. And we've got some evidence from the daily time frame that says we're at the lows for the month. There's a reasonably good chance that we'll get a bounce from here. So I thought it was a better quality risk to buy today than earlier in the week because I got a signal today, etc. Now if we look at other pairs, let's look at pounds. This is the 60-minute pound chart. Last week, X reversals off the lows from last week, a little bit of a rally. This high print here, this is the previous yearly highs. No real sell signals here, but there's buy signals that are being negated. You see these buy signals followed by the blue bars? That means the buy signals are no good. You can use a buy signal that's negated as a selling point. Why not? If we look at a higher time frame here, let's say the 120, look at how the sell signals are congruent along with the 60-minute, or along with the failed buy signals on the 60-minute. On the 180, great buy signals earlier in the week and last week, great congruence at the lows from last week and the 60-minute at the same price area. So the buy pressure appears to be pretty solid, somewhere near that 59, 70 to 80 area. A little bit of a pop higher is attracting the sellers, and you're getting good follow-through on the sell signals as well. On the 240, great congruence on the sell side for selling. So now I'm net short right now, right? As you can see, I tried to sell into this area here and added to it and got stopped out on whipsaw here. Went long at the bottom for the lows because I saw, whoops, what the hell is that? Don't need that. Went this breakdown to the buy side here. There was actually some buy signals on here that were then taken off at the end of the hour. A little frustrating there, but I was long. Good congruence over here, I thought. Sell signals over here, that's where I covered. I covered my long up into here and reversed on the sell signals, and now I'm short. So I'm making some money here for the week. On Euro, Again, buy signals, not really working. Sell signals being negated. This sell point here, this sell point here, all these sell areas here are right where this X reversal from last Friday is, right in that price area. On the 120, it's buy signals. So there's good conflict there if you want to be a buyer. Now the problem is you're buying up into the 9-month highs. Buy point was over here on the reversal. On the 180, no signals at all except good congruence on the 120 and the 180 for the buy point, which we did get some of that. And then on the 240, again, no signals at all. But here's where it gets interesting. On the daily, we have an X reversal into the high. This is why I sold Euro today. I'm most likely going to get stopped out of break even because the market sold off and it's bouncing right back. So if it takes me out, I'll try it again. But this X reversal here on a daily time frame, it might take 3 or 4 or 5 days for this signal to actually develop into a real, bona fide, 300-point down move to the 30.50 or the 129.80 area, right? So selling it here is a great place to sell it. The X reversal is still valid. When you're looking at conflict and congruence, though, this particular week, there hasn't been a lot. So that's why maybe what the toolbox is saying, okay, well, yeah, you could get short here, and you're maybe using, trying to get short on a rally that you're using the daily time frame to stay short on. But you're going to get some volatility in here, and you may get stopped out because, there's no real conflict and congruence happening that is really hardcore. Now, on yen, this is where it gets interesting. I'm going to start with the daily chart on yen because I want you to see something here that we haven't seen in quite a while, long time, and I'm looking for the right place to sell it. Let's start with the daily. Here it is right here. You see right here? As we approach these highs, these were highs that were, 1-year, 2-year highs, 3-year highs, right? If I'm correct, somewhere in there. High prints, or not 1 or 2 or 3 years highs, but I think 18 months, I think, something. I got to go back and look. Anyway, these are good H reversals, but notice how I told you before, H's get tested and negated quite frequently. But look at this one. This right here, open this up a little bit. This is a blue diamond reversal. This is also known as an exhaustion reversal. It can be early, but if it starts showing up, it's usually very reliable. You can see you did get a lead on it. If you would have sold the close when the blue diamond showed up, you would have had a nice lead on it before the next fresh high and then now today's high. I don't know if you would want to hold it. I personally would. I don't hold losers. If the trade works, I roll a break even. If it doesn't, it takes me out, then that's that. I look for the next one. And, of course, it's just a strategy. It's just a systemized approach. It doesn't mean it's going to work every time. But that blue diamond is a great clue. You see blue diamonds showing up or on the MT4 or on the multi-charts or trade station system. It'll be an E for exhaustion. It's a great clue. Now, if we go down the time frames here, it's getting real hard to manage, I think, this particular market. So you got to be careful of these signals. Look how you're getting buy signals and sell signals on the 60-minute time frame very quickly at the same price level. Remember, we're at multi-year highs now, and the market is just not coming down. Here's some buy signals here that you would have had to take some heat on, but they wouldn't have worked. Here's a sell signal that you got some room to maneuver on, but it would have taken it away from you. There isn't anything that's screaming that we're topping yet. You know what I'm saying? So it's a little bit more difficult trade. Here on a 180 time frame, you can see the H reversal is just not working. The buy signals are working, but they're coming good congruence this week, but they're coming late. They're really late. So you want to be careful. Here's a 240 buy signal that was earlier in the week. Took no heat on it. Do you want to be in a market for 80 points, or do you want to be in a market for 500 points? I think the market on the buy side is getting overextended. Now, the toolbox is still giving you places where you could be a buyer. So it's your call if you're going to take that conflict and congruence and really work with it on this time frame. What you really want to see is congruence 60, 120, 180, 240, daily, weekly, monthly. All out of those 4 or 5 time frames, you have 2 or 3 time frames that have a signal that's roughly in the same area on the same side. What you then want to see is the opposite signals on a lower time frame. So if you were to go down to and say, look, okay, apparently I want to be a buyer. Let's say I'm going to go with the buy side right here. You're going to go ahead and buy it. Forget the fact that it would have given you some heat here before it worked, but let's say you just went with the downside to buy it, right? Okay, if you did that, what you want to do now is somewhere between the 23-hour on the 14th and about the 1700 hour on the 15th. In this time frame right here, if I were to take and draw a little box around it right here, right? If we now go down to, say, the 5-minute time frame, and we find that, oh, look at this. Wow. It is really trying hard to top. Look at this X reversal today on a 5-minute time frame. I don't know, trading on a 5-minute time frame is risky, but it's really trying hard. Okay, let's see if I can find those. I got to go all the way back to here, I think. There's another blue diamond reversal at the high for the day. All right, what happened here? How come that box isn't showing up? What? That was on a 60-minute chart, right? Okay, this is where now? $1:15 at 7 in the morning, all right? Just kind of dragging here before it moves over. 1:15 at 7 in the morning. All right, let's find this. $12.14. What the hell? 1:15. There it is. Okay, I must have strolled right by it. Okay, where's that bottom? Right here. Okay. So let's suppose you wanted to be selling on the 60 or buying on the 60-minute time frame. There at 7 o'clock in the morning, you had a buy signal come on, and you had a buy signal come on the 5-minute chart. And if you go up the box, you see that those buy signals are starting to cluster together in places, and they're getting stacked on top of each other, which is another great clue we haven't talked about yet. When they cluster and stack on each other, whether reversal signals or trend signals, are usually more reliable. So this signal standing on its own isn't as reliable, but this is a cluster. These are clustering. They're usually more reliable. This is good conflict here. At the time you wanted to get long, right in this area here, which is where those buy signals were coming on, right in this area here, you're getting sell signals showing up and X reversals on a 5-minute time frame as the market is beginning to put on some weight. Now maybe you would have had to wait a little bit, and maybe you did take some heat, but that's not the point. The point is, at the time that you wanted to go long, you had some conflict and you had some congruence. It was looking really good for a while there that the long side might be the place to be. Now, market, of course, this X reversal was higher than these trend sells that didn't work. That's usually a good clue that we're going to get an X reversal negation here and we're going to head higher. Here's more buy signals coming on after the reversal pattern and the sell signals didn't work. That's good congruence. Now you'd want to look for a higher time frame to be somewhere in there offering some of the same thing. Yeah, see, this is a 15-minute chart. Here's a 30-minute chart. Not giving you a lot of help here, though. So my point is that when you see the signals on a higher time frame, you're looking for the same conflict and congruence issues with the lower time frames. So when they show up, you want to look for the same signals or more on the higher time frames, and you go to the lower time frames, you want to see lots of red ink where the green is. You know what I'm saying? That's good conflict. So you want the lower time frame to be in conflict with the higher time frame. Those are usually the best trades. George has got a question here. He says, red X reversals always on down bars, green X on up bars. Yes, that is correct. We'll get to a minute up and down bars. I'll get to that in just a minute. Jeremy says, I trade with Olanda's Java charts. He needs to have MT4. That is correct. And you get a copy of it from Progster over Code for Traders. He'll help set it all up. Okay, let's go ahead and get rid of this. Now, if we go back to Euro for a minute here. Move this up a little bit here, find it out. Okay, I want to draw your attention to something that can be very helpful when considering how best to get position or how best to use the signals. See the buy signals? The buy signals coming on down bars are less reliable. Sell signals coming on up bars are less reliable. This buy signal here, right, followed by a down bar, and then another up bar over another buy over here after it took a little bit of heat, followed by a negation. But that negation is higher than the previous lows leading between the buy signals. Excellent clue. In other words, you get a buy signal, that's an up bar, that's a great clue. You get a little bit of heat, followed by another buy signal, whether it's up or down, doesn't really matter, followed by, that's usually a very good buy. If you then get a negation, but that negation is inside the range that you already took heat on, that's usually a good buy. Here we came, we actually came all the way down to the double bottom before rallying. These clusters and stack signals, when you see signals like this, these are very reliable. The same signal coming every other bar, every bar, down bars for the most part. Market is moving lower almost all the time. When the signals are lower, see how this one's high, this one's slightly lower than this one is lower than this one. That's a cluster. The signals are all coming on, they're lower. The market is beginning to move lower. Great signal, you got at least something out of that trade. Clusters and stack signals are usually very reliable the same way, and they'll give you something. In this case, this one, didn't give you much, but you would have it would have been, maybe you might have sweated it a little bit because you had some buy signals coming in. You didn't know quite what to do there. But if you were short and you saw this kind of thing happening on the buy side, that would be a clue to get out, wouldn't it? Sell, you're coming in short. You're getting buy signals coming on that are inside that parameter of, buy signal is bracketing an attempt at a low. That's a good clue. That's what we call a bracket, right? Now again, you can see where these signals are not necessarily 100% accurate. Here's a bracket right here, actually. Here, first day of the year, sell signals at the open for the year, right? That was when the market was closed over the holiday. Followed immediately by a negation. It's not going to be perfect. You're not going to get, every single signal is going to work 100% of the time, and this is like a no-brainer thing you don't have to think about when you're using it. It's not like that. This is a great signal right here. This X reversal on a 60-minute at this high print here, because this high print was the last 2 trading days of the year. We look at a daily time frame. The last 2 trading days of the year, right? Followed by a big move lower within 3 or 4 days. Look at where that X reversal came on. That X reversal came on a 60-minute chart at the absolute traded high for that week. You would have taken no heat on it by going short. If you ran a break even on it, you might have gotten stopped out here. If you didn't and just held it, you might have been able to pull 150 points out of it, or maybe more, 200 points out of that hourly signal. Why is it such a good signal? Well, in my opinion, the reason it's such a good signal, let's go back to it real quick, is because of what happened at that point. The market traded to the high print for the day. On the daily high, the hourly gave you the X reversal, and it was never tested by the end of that day. Look at that. It went X reversal, down bar, the market closed lower and stayed there. So any lift, you'd want to be a seller. Look at those buy signals, though, coming on. They're late. They're at the highs for the year. 3,300 area was the high for the year at that point. So you want to use some common sense, but you also want to understand the context of the signals. Typically, the reversal patterns are where you want to consider starting your trade. When you get an X reversal that clusters, like if we look at Euro here from maybe last week. Oh, I'm sorry, it's British pounds. Did that again, made that mistake again. Here, right here, a little cluster of X reversals. So you might want to say, okay, I'll be a buyer there. That's the lows for the week on a 60-minute time frame, and we had some congruence on the higher time frames, and the market starts to advance. Now you've got sell signals come on that are, like I call, wrong-footed. There's sell signals coming on up bars, less reliable. That might be a warning flag to roll your stop to break even maybe, but you might want to let it work. So now you got some nice move happening here. Now you're looking for a place to cover your longs or maybe go short. If you really believe you're going to get a brand new fresh high for the year coming on next week, you might want to be a buyer and add to your position on these signals over here. Now, if you did that, you would have had a reason to get out right away, which is the negation, and you eventually would have rode it all the way back down to where you started from. So maybe that isn't the way you'd want to trade. But if you were very bullish, you got the toolbox helped you get positioned, and then gave you a reason to add to it. There's no sell signals coming on up to that point that were working. You could be very aggressive here. But what would you also want to do? Roll your stop up to make sure and protect yourself. Or if you got a negation factor right after the signals came on to add to it, maybe that means you just take the whole thing off right there. You see what I'm saying? So it's not that the signals are going to be, you just follow them blindly. It's more along the lines that you use them in conjunction with some common sense. And, you got to really allow the market to do whatever the market's going to do. Whatever it does is the right thing. So let it do whatever it's got to do. On Canada, this market here for the past 7 days or so, I think is saying some pretty clear things. It's got really good support right about here. Well, you could buy down into that support. You got X reversals, H reversals. The market's trying hard to turn from Friday. Here it is an entire week later, and no matter what signal you took on the sell side, you could not possibly have made money this week. That's a good clue. Now we got buy signals coming on. Yeah, they're wrong-footed. They're not the best ones, but they're stacked and they're clustered. And the market appears to be finding some buyers down here because we're bouncing right off of those low prints. Maybe it's time to buy. Now that doesn't mean it's going to work, but it's a good clue. So let's take it. Now what do we do? And this is what I teach in my Psychology of Trading course and on my one-on-one coaching sessions and everything, is that it doesn't matter what the market does next, really. It matters what we do next. So if we use the toolbox to help us get positioned, great. Well, it helps us get positioned. But let's not be idiots about this. The market can take it away from us just as easily as it can give it to us. So what's our risk? Well, I'm risking a new low. I'm not going to put my stop up in here where the market has already proven its ability to trade to. I'm putting it outside of that area. It hasn't been able to get here before today at all this week. So that's a good risk. Now, if it rallies and I see a move maybe somewhere to a fresh high for the week, I might roll the stop to break even. Because I don't want to give it back, right? It's up to you to decide how you want to use the signals. But the bottom line is that the toolbox, if you use some common sense along with the toolbox, it'll help you get positioned much more easily. Jeremy says, you say members can log in and trade alongside you. What does that mean? Are we in a chat like this all day? No, you're not in a chat like this all day, but the mirror trading program, that's something else we can talk about later or off the air. Maybe would you just send me an email and I'll send you some details on that. The mirror trading program is a great way to take advantage of the toolbox because I use the toolbox all the time and I wrote the toolbox and I know how to use it. So typically, when I use it to trade my own account, my own money, I do pretty well at it. So if you're mirroring those trades, that might be a real good way for you to have access to the toolbox. You're basically leveraging my knowledge and experience into your own account. That's not a bad thing. But in any case, if you want to own the toolbox and learn how to use it, then this is the concepts that you want to begin working with. Okay, let's do this. This over to here. Okay, so here's the thing. The most accurate trend signals are clusters and stack signals. Again, I also like to put in there, you don't want them to be wrong-footed, which means You don't want to have a sell signal come on an up bar. Now that doesn't mean that the market won't move lower. As you've seen, it's done that, but it's less reliable. You know, if you get a cluster and a handful of stacked signals on down bars and they're all sell signals, that's a real good clue. So you want to kind of weight those clues a little better. I think the most beneficial reversals are the exponentials, or the X reversals, or the E reversals for those of you who have it on the other platforms. When I say the most beneficial is that they tend to be the ones that will give you a lead more often than any other reversal. In other words, if you do the X reversal, take every single one of them and at least try them, you're going to get a lead on them like 65-70% of the time. What you do with that lead and what the market actually does later kind of determines how far you go. But I mean, you could get, a lot of times the X reversal will come on and the market won't trade that price again for 2 weeks and be 400 or 500 points your way in that time. So I mean, there's X reversals I think are the most beneficial. They're great signals. Blue diamonds, they're rare, but usually very reliable. You'll get a lead on a blue diamond reversal or an E reversal all the time. Doesn't mean you'll make a ton of dough, but it does mean that it's there. It's available. It's an opportunity. H reversals are often tested. You know, you get a lot of H's before the market finally tops or bottoms. So a lot of times what I do is when I see an H reversal, it's coming. It's not necessarily today. And I look for other clues. You're looking for conflict and congruence, like we talked about before. You're always looking for higher time frames to have a similar signal when comparing to your execution time frame, and you're looking for lower time frames to be opposite of that. The important thing I want to stress is that you want to use common sense and trade experience when using the signals. It's a guideline. The Pro Trader's Toolbox is a guideline for an underlying type of market structure, and the Toolbox is attempting to isolate changing psychology or consistent psychology. So when the signal comes on, use your common sense. I mean, if you're getting trend sell signals and the market's at a 2-year low, I would say if you see any buy signals that are reversals, those are probably the ones you want to try to take. I wouldn't go short into a 4-year low. That's silly. You know, it's less reliable. So use your common sense and trade experience, but the Toolbox will give you some nice clues. So welcome for new listeners. Here's my contact information. I want you guys to keep this handy. The floor is open for Q&A. Mirror trading is available now. And also my website, you can sign up for my weekly performance wrap-up and summary. All you got to do is sign up once, and your link is good for the entire year. You can come and watch my performance every Friday. As of tomorrow, let's see, I'm looking at my trades right now. If every trade is stopped out on my stop, I'll have made 180 points for the week. If the trades are working that I have on now continue to work, right now I'm up about 240 points. If they work for whatever they work, worst that's going to happen is I'm going to make about 160 to 180 points for the week. So I want to show you how well I did on that, or why I did that. I actually think we're going to get up closer to the 300 or 400 on that. But I was just stopped out on my short euro, which is not, again, that's why you want to break even. I mean, it wasn't the best quality trade, and the Toolbox was saying that. Look, you don't really have a clear signal here, but, geez, you're up at a 9-month high. You got to be a seller on a lift here, So Toolbox really didn't say it was the best trade, but I took it, got a lead on it, used that lead to break even, and I got break even, so there you have it. Jeremy says, I haven't purchased the Toolbox or the psychology course. Can I still set up a mirror trading account? Sure, absolutely, yeah. All you got to do is just sign up. I mean, all those details, I actually have a guy that can handle that for you. That's what I'm saying. If you're interested, send me an email. We'll have somebody take care of it for you and get you set up. You'll be mirror trading by next Monday, if you're interested. To give you all the details on the mirror trading program now when we're on the air, I don't mind doing that if nobody has another question, but I want to make sure and get to everybody's questions so we don't miss anything. One guy says, how difficult is it to set it up on MT4? It's not difficult at all. All you have to do is buy a copy of it, send your details about your MT4 so Progster knows who to make it for, and it'll go resident in the electronic assistant portion of the MT4 platform. and he'll set it up for you. He'll be more than happy to give you the code. He'll send you the code. You import it into MT4, and there's a process you do. He can walk you through that, and he'll make sure that it's installed properly and operating properly. He won't train you on how to use it. He won't tell you if you think you're seeing a good trade or a bad trade. He doesn't do that. He'll just say, it's working properly and it's installed properly. The rest is up to you. But he will, of course, take the time necessary to do that. He needs a day or two to do the programming. So, the sooner you get with him and say, hey, I'm interested, he'll tell you what to do next. He'll work with you and set the whole thing up. Then you want to get a hold of me, and I'll give you a little bit of private training if you need it, or get you started. And, of course, everything on the website is there for your convenience, too. George says, the hook the same as the X reversal. Red H's are on down pairs, green H's on up. Yes. Green H's hook reversals will be on up bars. X reversals will be on up bars. Red H reversals will be on down bars. Red X reversals will be on down bars. That's actually a good question. A lot of people don't understand that, because the blue diamond, when it comes on, can be on either bar. It can be on either an up bar or a down bar, and that confuses them, But for the most part, you're going to see a lot more X's than you will blue diamonds, and those will work a lot more frequently right out of the box than the H's will. A lot of times you get H's stacked up and clustered up, as the market rolls into a top. And then you'll see an X reversal or an XH stacked on the same bar, and the market will fail. So when you get lots of H's, that's okay. It's fine. Just let it work. You're getting close to that top. You start seeing X's and H's and XH's stacked into a high print, you're probably right near that top right now. So you want to be careful to consider getting that right there. You know what I'm saying? Let's see. Okay, that looks like that's it. I don't see any other comments or questions in here. We got a couple of minutes left if you guys want to take it on something. I don't mind, we can go off topic and talk about anything you want. I noticed we got a couple of handles in here that I've never seen before, so maybe you guys have got questions you'd like to discuss something on. I want to make sure for you guys that are brand new listeners that you do indeed have the contact information here. You guys got all that, right? So there's no problem. Okay, Fo's got a question. Details on mirror trading on the site about mirror trading don't seem to be there. I've sent an email. Okay, all right. I'm putting the website details together this week. I'm actually working with Eddie, and we're writing the copy, everything that's going to be in there, a little Q&A section, all the links that you need to sign up for, so you don't have to do anything except point and click. We're going to have all that put together this week on the mirror trading program, hopefully by Friday, and maybe it'll be up and running over the weekend, but it'll be up soon. Now, all those details, we already have all that. All you got to do is say, I'm interested. I'll send your details to Eddie. Eddie will walk you through getting signed up. So we'll take care of you. It won't be a problem. We'll get you hooked up. But it's not on the website yet, and we should have that, fairly quickly. Jeremy says, mirror trading, does MT4 need to be running for the trades to run? If my computer is off, is it still running? I'm a little confused. No, it's still running. That's a really good question, because I don't understand exactly what. Are you asking me, does my MT4 need to be up and running in order for the trade to be executed or the stop to be traded or whatnot? The answer to that is no. Do you have to have it connected and all that kind of stuff and it all turned on? Yeah, you do. But that's different than having it turned on at your computer. You know what I'm saying? It's sort of like your broker is getting the trade through Zulu. It doesn't do a look back and say, well, his computer's not turned on, so therefore we're not going to give him the trade, or we're going to take his trade off. We're going to let him stay in the market when he's not supposed to be. They're not going to do that. You know what I'm saying? So you need to make sure that it's all connected properly and it's set up and it's turned on properly. Then it doesn't matter if your system is up or running. He says, okay. And actually, that's a great question. We should put that probably in the Q&A box the FAQs for that. But I don't know. We'll see. We have a couple of minutes left here, guys. I can let you get out of here early if you want. I'm going to take and have the recording for this Toolbox training uploaded and then on my site during the next little bit, next day or so. If you're interested in getting the recording or listening to it again, for those of you that own the Toolbox or been regular users, on some of this training, we cover a lot of the same ground twice, So unless you ask some specific questions, a lot of times listening to every single broadcast that we do, you're getting a lot of redundancy there. And that's why I think it's good that you come and ask questions when you have them, because then we add a little bit of content to each broadcast. But if you really like something you heard about in here today, I'll have that recording up. Just make a mental note of that. When it's available, it's available. If you want to go back through the other broadcasts and the other training that I've done, a lot of similar material there, but you might want to just skip to the Q&A end then, because Q&A is usually where we have all this fun stuff where people ask interesting and unique questions. Jeremy says, I use Oanda. Was that a problem for mirror trading? To the best of my knowledge, it's not. As long as you have an MT4 platform, you should be fine. Now, the Zulu Trade, who is the provider, I don't know all the brokers that they have a relationship with. You have to trade through an approved broker with an MT4 platform. If Oanda isn't one of their approved brokers, you'll have to switch your account to one of the approved brokers. But I would bet they are because they're one of the biggest houses, so I wouldn't worry about that. You can get that on the Zulu. That's one of the things that you want to ask Eddie. Manny says, I'm beginning to enter in the trading arena. I need you to please send me all the information about your method. Manny, that's the wrong question to ask. I can't send you all the information about my method. There is no method. I think you're getting confused as to what we really do here, what I do here. What I do here is I help people understand the psychology behind the marketplace so you can understand how best to apply your personal psychology. I don't tell people, okay, if this bar crosses this bar and this then happens, then you buy or sell. That's not what we do. And the reason I don't do that is because that's not the way to win. The way to win is to understand your own personal psychology and to understand what the market psychology is. That's a process that you have to acclimate and learn. So the best thing to do is to trade, make mistakes, lose money, not just document everything, and then get some coaching. So that process is what I do. There's no method to how you buy or sell in the market. There is no right or wrong way to do that. There's nobody that has a mortgage on the truth about that. There's no one way that will work better than every other way. So what you're trying to do is get the information required to win, but you're not educated enough to know that the question you're asking doesn't lead to an answer. And I'm not saying that to insult you. I'm just saying you didn't know that. There is no method that's going to make you more successful or less successful. You have to understand what you're doing and understand how you buy and how you sell and what to look for in order to win. And that's something I can help you with, and that's something the Toolbox can help you with. But it's not. You should never buy a copy of somebody else's method until you understand somebody else's tools, I should say, until you understand why they created those tools. So the better thing to do is for you and I to have a little conversation, just a few minutes to talk, and I can kind of point you in the right direction, or read a couple of my books first and just keep coming to my broadcasts. At some point you'll want to be a little bit more assimilated to what we do. David says, I had asked you about sentiment reports, and you gave me a great CFTC info. When can I call you for some more info? I don't know what you want, but we can talk. I don't know what you mean by CFTC reports and info. Jeremy says, this is very helpful. It says, you seem you will not make a fortune teaching. Why do you spend time teaching? Well, you have to understand that, my career took its turns and went where it went for a lot of strange reasons that I had absolutely no control over. And my career turned out to be the way it is, the way it is. It just turned out to be the way it is. And there's a tremendous need for education out there in this business. But the problem is that all the accepted education is really horseshit. You know, I mean, I don't need to tell you. All you got to do is take a course from someone like, you know, Invest Tools or whatnot, Optiononics and all the rest of those guys, online trading. You know, just spend the money, take their courses, and realize it's bullshit. You're never going to win using that crap, and you wouldn't know that until after your money was gone. And I talk to people like that every day who've spent tens of thousands of dollars on stuff that doesn't work. And if you read my book, The Art of the Trade, in there, chapter 3, I call it Technical Analysis or Clairvoyance for Profit. I talk about the problem in the industry that people believe they have an emotional and mental belief structure that says studying the markets will make me rich. And they're taught, and then people are in this business that are selling all these different colored crystal balls trying to convince you that they have some secret method, and it's all horseshit. It's never going to work. In fact, those people, a lot of them know they're selling bullshit, and they'll never let on that tell you that. I could name names if you want. But the point I'm getting at is that if you really want to win, there's a different thing you need to focus on, and nobody teaches that. You know why nobody teaches that? Because if you can take a crazy supercomputer and program it with some ridiculous algorithm that only makes sense to you, but somehow in a trending market over the course of a year, you can pull out 28% gain on the S&P E-minis, you're a frickin' guru, and the world will throw money at you like you're God. And it's the biggest, most ridiculous crap you've ever seen, because next year what happens? The guy loses all that money plus more, and he's no longer a guru, right? So that's the point I'm trying to make, is that you're being lied to. And it's a hard pill for some people to swallow. And I still get grief from it. And there's always some moron out there who thinks that because he made 40% on his money this year, that he knows what he's doing, and he's going to pull the, he's got money now, and he's going to pull the stops out on selling it to everybody. You guys probably remember Ken Roberts, right? It's crap. And there's a need for people to know that that is crap. It's not going to work. So that's why I do the education and teaching I do. It's not to impress people that I have some secret to the markets. It's the exact opposite. It's to tell you, look, if you want to win, stop listening to those people. You got to start thinking about how you think and how you behave and how you manage your time and how you effectively participate when you buy or sell. What are you really doing? That's what I teach. I don't teach the markets. I teach management of a person's abilities. There's always a need for that. The greatest people in the world at their chosen professions have coaches. You know, you ever seen a Super Bowl winning football team that didn't have a head coach? Come on. I have a coach. The greatest traders in the world all have coaches. That's what I do. It's not teaching anything. I'm coaching people that want to be winners. And they've come to the conclusion that I have, that there's no easy way to do this. There's no easy way to the top. Quit looking for it. It's a hard process. You got to learn, acclimate, do the work. But if you do, you will win. And I have a whole series of coursework to help on that. And I got a little cheat sheet. That's the Pro Trader's Toolbox. But you still have to do your own thinking, your own personal management, your own personal control, issues of participation. All those things have to be done properly. And you need help with that. So that's what I teach. You know, it's not teaching people to trade. It's the same thing that anybody wants that wants to win, is a solid coach. You know what I'm saying? Jeremy says, I lost 5,000 using technical analysis. well, I know. David says, I meant CFTC reports. I'll give you a call. Okay, well, if I can help you with that more, I can. Jeremy says, congratulations on your wedding, by the way. Oh, yeah, for those of you that know or don't know, I asked my girlfriend in Virginia to marry me over the holidays, and the fool said yes. I don't know what I'm going to do. Now I have to get married. I don't know why she thinks this is going to work. She already knows I'm a misogynist. She understands there's issues. In any case, though, it's all good. No, we should be very happy together. Well, she'll be very happy for sure. Anyway, Looking at the clock, we're out of time. You guys good to go? If anybody got a last minute question, otherwise I'll let you get out of here. We'll wrap up today. I'll be doing the Pro Traders Toolbox training every month, tentatively for the year, but for sure February and March. So for you guys that want to get a copy and do more training, don't worry, we'll have lots of it. For those of you that want to come every month, I'll be doing this every month, at least through the end of the quarter, maybe for the whole year. I want to build a nice library of training that can just be on the web. People can view it anytime, so I'm going to do those live. David says, awesome. Congratulations. Thank you. Okay, guys. Well, listen, have a great day. I'll let you get back to your afternoon and your trading. Again, here's my contact information for you new guys. Feel free to consider me your friend in the business. I'm still the only guy in this field that answers his own phone, so feel free. In between now and the next time we talk, I hope you have a great day. Don't forget to run your stops. And I'll see you tomorrow at my weekly performance wrap-up and summary at 4:15. Details to sign up are on my website. Thanks, guys. Have a great one.